welcome everybody to the Valuing Nature introduction to the Value Balancing Alliance. We're glad that you can join us today. We have a action-packed group of panelists, and we also want to have a good discussion with everybody. And so if you have any questions, if you could please put them in the Q&A icon you see at the bottom of the screen, and we'll get to those after we go through the first round of panelists and have a discussion. To kick things off, I'm honored to be able to introduce the ambassador to Canada from Germany, Sabine Sparweiser, who's a longtime friend of Canada and a longtime champion of the green economy, who has helped make many valuable connections between Canada and Germany and the European Union over the years. So without further ado, I'd like to pass it to the ambassador. Ms. Ambassador.
Thank you so much, Toby, for inviting me and giving me an opportunity to talk about this subject. I shall be very brief. They're very knowledgeable panelists, and I don't want to take too much of your time. I just want to say that this particular crisis now, COVID-19 crisis, has really shown like nothing before the need for data, for science-based data in our decision-making. And we also have seen that countries who are basing their decision-making on science and on transparency and who take in sort of all aspects of the data that are available are doing a lot better. And you can see what happens in countries where this is not the case. So in many ways, I think COVID-19 makes the case much more that we all need to measure success in a much more stringent way. This goes for government as much as for business. And the idea of the Accountancy Alliance, I think, is a very important one. We need to know how to measure success. We need to know how to solve the big dilemmata that we have, the dilemma between economy and ecology. Now in COVID-19, it's the dilemma between health and wealth. And we need to make the decisions in a way that is transparent, in a way that translates to our values, and we need to develop policies that address that. In Germany, we've started to do that. We have a great word for that. It's called taxology. That means we try and find methods to take in all the factors into the account, social, environmental, economic factors, and come up with accounting that makes it comparable, so that we can look at companies, how they're doing compared to other countries when it comes to ecological costs, when it comes to social costs of what they're producing, and we don't just measure how much profit they're making. So all of this is necessary for our companies to do well in a green ecology. It's necessary also in order to have international comparability. The EU and Germany, the German government, have now started to work on this accountability in a big way. The EU has actually started a big process. We want to find common language for accountability. The German government does it as well. And I'm really proud, I have to say, that in this initial effort and in creating the NGO who does this, German companies have been at the forefront, beginning with companies like Volkswagen, Porsche, and of course, a very big sponsor, BASF, and we're going to hear from them later. I also want to laud Corporate Knights for this initiative, for working on those issues, and for launching in the middle of this crisis the idea of building back better. The anyway, not just stopped or frozen. There are many, many, many things that are getting broken in this lockdown, and we have to be building back quite a lot of it. But to do it in a way that allows us to do it much better and much more sustainable is going to be the biggest challenge, but also the biggest opportunity of our generation. Thank you.
Thank you, Ambassador, for those stirring words to help frame the conversation that we're having today. Next, we're going to turn over to Christian Heller. Christian is the only one with the presentation with PowerPoint slides, just to warn the audience, but I think it will be instructive, and he's going to give a bit of an overview. So Christian, I'm going to share your slides now and then turn it over to you.
Thanks, Toby. Thanks, Ambassador, for the introduction. Thanks for your important words that, yes, with regard to COVID-19, we need to build something back, and we need to do this in a much better way than we have done before. The Value Balancing Alliance has been founded before COVID-19, but the intention is more or less exactly the same. So I will now provide you a short overview where we are heading, and I'm sure that we will have a quite intense discussion afterwards. And Toby, you let me know if I just need to ask you to go to the next slide. Okay.
Sure.
So if you're looking at this slide, and I think this is nothing new for you, the key message is that the business environment has fundamentally changed over the last years. This comes with regard to valuation of industry players compared to new technology companies, and goes down to COVID-19 and the impact of global value chains that the virus is traveling around the world, and in the end crashing our current business models. If you go to the next slide, please, Toby. Interestingly, and as you all know, the current accounting systems have started to be developed back in the 15th and 16th century in Italy, and in the end, in a black and white sense, we are still steering our companies along these principles, talking just about profits or shareholder maximization. The key question what we need to ask ourselves as companies, and now I'm taking on the company point of view, is this enough, yes or no? Next slide, please. Thanks, Toby. So since 2010, a few companies have started to introduce new, you could call it performance assessment methodologies, which are currently called impact measurement evaluation. Credit in this case goes, first of all, to Puma and to the caring concern who have started in the end what we call environmental P&L. The key notion with regard to the concept is that it's going far beyond the traditional reporting we are used to in the area of, for example, the CO2 equivalents we are emitting as companies. What we are heading for with impact measurement and valuation is to understand the effect of business operations on climate change, and also to value the impact of these emissions on our health and well-being. We are monetizing these costs and benefits in a way, in the case of CO2, like concepts of social cost of carbon. So we are not applying market prices in this exercise, it's total costs and willingness to pay concepts. This is shifting the perspective on business performance from, let's call it, the value to business to the value to society companies are providing. Next slide, please. As I've said, the whole development started in 2010. As of today, we assume it's more than 1,000 international companies who are applying these kinds of methodologies at various stages. Most of this is in the piloting stage. And the challenge what we have, if you're just looking at the picture, there's no comparability for the time being. This goes back to the data we are using, the quantification or measurement systems behind, as well as the valuation factors and disclosures. With valuation factors, I mean the monetization figures for non-financial aspects like CO2. There are currently around 60 companies who are really disclosing what they are doing in this regard. And for all, the key feedback is mainly driven by investors and mainstream investors. And they say, this is quite interesting with regard to these new methodologies, but we can't make use of the results as long as we don't have any kind of comparability. Next slide, Toby, please. And this is one of the key objectives what the Alliance is following here. So we have set ourselves 4 main objectives. The first one is standardization of methodologies. So we are currently digesting all methodologies which are applied in the market with regard to impact measurement and valuation and bring them together into a consistent methodology. The second one is external disclosure. This is all about demonstrating the results of these calculations in a comparable way. Next point is scalability. So currently mainly big corporates are working on these tools, but first of all, it needs to be applicable to all companies. So we're also talking about SMEs. And when I'm saying scalability, this is in the end that we need a global level playing field that this will be implemented within companies. Otherwise, we are not able to transform business. The last point and objective, and I think this is one of the key USPs of the Value Balancing Alliance, the members what we have onboarded, and you see them on the right-hand side, we are all committed to pilot this in decision making and steering at the company level. So we hope in the end that we are not ending up in a document which will be somewhere on the web. We really want and are heading for companies who are integrating this. For this, we have also built partnerships. One of the key partnerships we are running is together with all of the Big Four. The Big Four are pro bono consultants within our alliance, providing for free their methodologies in this regard. And we are also contributing with resources like manpower and budgeting. We are building this alliance with partnerships and major partners like the OECD, like the World Bank, like the EU Commission, like universities as Harvard, but also let's call them the usual suspects in this arena like SASB, IRC, the World Business Council, Mark is on the line for the Capitals Coalition and others. Next slide, please, Toby. So with regard to the methodology, which we are developing as of today, I said, first of all, for us, it's about to demonstrate the impacts, the positive and negatives companies are providing to society. So this is in the end, not just with regard to environmentals. So what is the impact of our CO2 emissions? This is also with regard to social stability and with economic prosperity. Just one reflection on the methodology. I mentioned before that impact measurement and valuation is about the well-being of people. So in our methodology, for example, on the right-hand side, taxes and wages are a positive contribution to society because it reflects purchase power. If companies are not paying wages or taxes anymore, and if you think this through until the end, there will be no purchase power, no infrastructure, no education or health systems anymore available. So we as companies need to think about our role in society, and we should demonstrate this because wages and taxes are a major contribution to stability in our systems. Nevertheless, we as companies need also to think about, if we take multi-capitals into account, how is this reflected in our own operations and in the end in accounting systems. So here we are talking about dependencies and we are talking about the value contribution to business itself. As an example, we are here heading for new thinking around, let's take human capital. Currently, investments in trainings are just on the cost side of things and are not seen as an asset. What we are heading for is keeping the financial statement untouched, but adding additional capitals, intangibles, or ESG factors, however you would call it in the end, into a common statement that you have the complete enterprise value reflected. Next slide, please. One key aspect for us, and this is, I think, the precondition to get this going, is to talk about a global level playing field. So we're working with a foundation which is called Global Solutions to address new performance measurement systems for companies on the agenda of the G20. With the OECD, we are working in a program which is called Business for Inclusive Growth, in the end, to introduce new measurement and valuation systems, how you can assess the value of inclusive value chains. This is in the direction of social and human capital aspects. And we are mandated by the EU Commission in close cooperation with the Capitals Coalition, and Mark is on the line, and the World Business Council, to provide green accounting principles to the EU Commission. And for the accountants and finance experts in this group, if you see the working title within EU Commission saying EGAP, you immediately see where this is heading. And for the EU Commission, this is one of the key drivers to enable what is called the Green Deal within the European Union. So Europe is taking a lead from the legislative point of view in the end, but as international corporations, for sure, we are heading for an international level playing field. And this is all about international accounting standards, such as IFRS, or you can also use US GAAP. This will take quite some time until we get there. So the first call of action next to the corporates who should apply these methodologies, especially in the direction of management accounting, is to the financial market players, asset managers, asset owners, and insurance companies to take up these methodologies and to think about a reallocation of capital. Next slide, please. So all in all, the Value Balancing Alliance was founded in the end to transform business from the current principles of profit maximization to value optimization. As it was outlined by the ambassador right in the beginning, this is about bringing together different capitals and their trade-offs in decision-making and steering a company. We are fully convinced that impact measurement and valuation is one of the key concepts and methodologies which will support us in this direction. And we are also convinced that the current efforts, what we have seen over the last decade with regard to sustainability reporting, integrated reporting, and all of the other initiatives in this direction are just not sufficient. We need to get into the DNA of companies, and this is in the end about management accounting. So we need to onboard controlling and finance, otherwise we will fail. And for me, the interesting point is when we have introduced the Value Balancing Alliance, we were talking to the sustainability experts. As of today, the heads of controlling and finance have a much bigger say in the whole development what we have and are intensively engaged in the current developments. Next slide, Toby. Thanks a lot. Looking forward for the comments and for the discussion. Thank you.
Thanks a lot, Christian, for taking us on that excellent tour. We have with us a number of the key people in Canada from finance, from some of our largest companies, industrial players, and also from government in terms of on the procurement side that could be catalytic in driving reporting on some of these things. But first, I'd like to invite Yulia Reuter, who, just looking for Yulia here. There she is, to share with us. Yulia's with Manulife. She was brought in a number of years ago with a remit to get a handle on natural capital. Manulife is a major owner of timberlands and is impacted by natural capital. So it's one of the first significant companies to have a dedicated person specifically on natural capital. And Yulia has taken that foothold and spread it across large swaths of Manulife, which is a powerhouse that owns John Hancock, of course, and is a financial powerhouse globally, but certainly from Canada. So without further ado, over to you, Yulia, to share us some thoughts.
Sure, thank you, Toby. Just by means of quick introduction, I'm not sure how many on the call are familiar with Manulife. We are a international financial services institution that provides insurance, asset management, and financial advice to individuals, groups, and institutions. We serve 30 million customers, employ 35,000 employees around the world, and we manage over 1.2 trillion Canadian dollars under management. My role is one more thing. We like to think of ourselves as a financial institutions that makes decisions easier and lives better for our clients. A4S, or Accounting for Sustainability Program, was established in Manulife in 2017 as part of our commitment to the Prince of Wales Accounting for Sustainability Project, which convenes financial and accounting leaders around the world to drive sustainable outcomes to the sustainable economy. And my role is to support our management, specifically our Chief Financial Officer, with the quantification of natural and human capitals, with some of the first outputs of the programs being our commitment to Task Force for Climate-Related Financial Disclosures, our green bond issuance, and more broadly, quantification of our climate-related risks and reporting aspects. Toby mentioned that we are a financial powerhouse. We are the world's largest manager of of timberland assets for institutional clients, with a 10.5 billion assets under management in our timberland portfolio and 3.6 billion of farmland assets. And I just wanted to give you a quick introduction of what we've done in that space over the past couple of years. We've conducted the pilots with the World's Business Council for Sustainable Development, led by our timberland and farmland subsidiary, Hancock Natural Resource Group. And as part of that pilot, we looked at 2 properties. Let me just pull up my records. One of them was the plantation forestry in New Zealand, where we focused on carbon sequestration, reduction of nitrogen, leaching in water, biodiversity, and recreation. And what we learned is that the Natural Capital Protocol, which was piloted by this collaborative industry development, was helpful for general process, not necessarily specific for the actual valuation. The fact that we had detailed information on property made valuation possible, but it certainly made it challenging in areas where the markets for some of the ecosystem services did not exist. But overall, we felt that there was significant value existed for natural capital sources. And then the second pilot we did was for valuing the health benefits of plants for the Macclesfield Forest in Washington State, where we focused on the healthcare value of forest plants that are used to prevent and treat common community diseases. So again, the Natural Capital Protocol we felt was helpful in mapping the impact and pathway dependencies. We did need help with from the natural capital accounting practitioners. And overall, it required innovative accounting policies, because we had to get into the value of ecosystem services for a specific forest, from which we had to derive the estimates of economic value for subsistence traditional life use, and from which we could derive the value in terms of avoided healthcare costs as a proxies for the value of these traditional plants. So I think our experience overall has been that some of the frameworks in place were valuable for us to start. And I know there's a conversation which Christian just introduced on consistency and comparability. We did not even go in that direction because we actually needed more information for specific geographical areas and specific properties. So thinking of how this can become consistent across business lines and jurisdictions is an even more complex issue. So we found that we needed more information on the ground for our very specific properties. But of course, normalization and standardization is a very ambitious task. So with that, I'll pass on to our next panelist.
Thanks, Julia. That was a helpful overview. The next panelist is Sara Takaki. Many of you will know Sara. She is with one of Canada's largest pension funds, HOOP, but in a prior role, she played a key role in the expert panel on sustainable finance task force the federal government launched, and she had a lot of involvement on that and was exposed to maybe more insight than any single brain in Canada in terms of good ideas for finance to help to reinforce the sustainable economy and natural capital. So I'll pass it over to Sara.
Thanks very much, Toby. So as Toby mentioned, I'm the Senior Director of Responsible Investing at HOOP, the Healthcare of Ontario Pension Plan. And we manage approximately $94 billion on behalf of the healthcare workers in this province. And we care deeply about delivering on the pension promise and providing retirement security to healthcare workers, especially now. So a good place to begin might be what integration can look like for investors like pension plans. When we think of ESG integration, we typically focus on risk and typically focus on the pre-investment phase. However, investors can also factor in environmental considerations into investment strategy, corporate engagement programs, view it as a potential source of alpha. It can be integrated into total risk analysis and portfolio management activities like sustainability programs and value creation projects. So integration can actually be applied quite broadly, and to enable it, investors require certain inputs and tools, including good data, knowledgeable advisors, and useful benchmarks and standards. So I'm going to touch briefly on each one of those three things. First, data. For public markets investments, investors have often had to rely on self-reported data from companies, and the availability and quality of this data has sometimes been a challenge. But we're seeing new types of data become available and more accessible, like geospatial data, and new analytical functionality through leveraging technologies like natural language processing. And this is really opening up new sources of information and enabling new insights for investors to use. Moving on to knowledgeable advisors. For private investments, investors frequently work with external service providers. Think accountants, auditors, technical advisors, law firms, etc. And the expert panel on sustainable finance highlighted the importance of having a knowledgeable financial support ecosystem to help mainstream sustainable finance and make ESG integration the norm. And so as an example from some of the conversations I heard as being part of the expert panel secretariat, I heard companies talk about how our changing climate is already affecting the useful life of certain assets. And so factoring this into the financial information investors receive, financial statements, audits, is really critical. And I know we're kind of hearing about some of that work going on in this space today. And so finally, benchmarks and standards. So pension plans have to invest in order to be able to deliver on the pension promise. And essentially every investment has environmental risks or impacts. These can be direct or indirect, positive or negative, and often both. So resources like standards or frameworks can be really useful to make sense of the data, to enable comparison across companies and determine whether an investment fits with an investor's objectives and risk appetite. I do have to say that on the flip side, if there are too many standards, then there are really no standards at all, so that can be a challenge as well. And so to wrap up, I think that we are increasingly appreciating the interconnectedness of the health of society, the natural environment, the real economy, and capital markets. And while we've known certain things have value, they've been challenging to value. And so I think we'll see ESG integration approaches evolve and potentially expand as the data continues to improve. The financial support ecosystem continues to advance in these areas, and we continue to coalesce around useful standards. Thanks.
Thanks, Sara. That was really helpful. Next, we're going to turn to Marcelo Lu. Marcelo is the president of BASF Canada, and is really passionate about these areas, and he sees it through a business lens. So I'm going to pass it over to you, Marcelo.
Yeah, thanks, Toby. I appreciate being invited here, and thanks everybody for making the panel. What I think is very clear is that we're not in a fad moment. This is not a trend that is going to come and go out. I think Sara just mentioned it right. This is something that is going to be here to stay, and is only going to expand. So the discussion is very valid and something that we need to put focus on. Yeah. Just a quick intro to what BSF has done, and we've been really, we consider ourselves, but also been mentioned as being a leader in the industry space for reporting sustainability for a very, very long time. We've gone through a process of looking at all of our products, more than 60,000 of them, and classifying them under what we call SSS, Sustainable Solution Steering, and basically classifying them into 4 different categories, where an accelerator category is the one that provides the highest sustainability value of the product going into the market, going into society. Yeah. Something else that we've done in development as well with multiple partners is this value to society that I think Christian mentioned, is really the full value or the full impact that we make to society. So it's not only, let's say, on the revenue side, but also looking at the employee base and also environmental impact. So we've been always trying to promote, and we've been reporting on these figures for quite some time. But the issue is, I think, goes back to what multiple participants now mentioned, is this standardization. We are comparing ourselves in a vacuum, in a way, if we're the only ones doing it. And what is very, very important is that you start getting that standardization and really hone in on the KPI focus. And I think what is very important, what Christian mentioned, is that for investors, at the end of the day, you need to give a numerical value that they can go back to. I think Yulia was also mentioning something around this, and being able to extract the actual numbers and being able to compare these numbers across. Yeah. So we definitely don't want to have multiple standards. Back to what Christian presented is really, we need to go and invest the time, and it will take time to really change full accounting standards. We're not talking about creating a standard for Canada, creating a standard for the EU. This needs to be a global approach in a way. Yeah. What I think also is important not to forget is that if you are able to assign a value that usually was only considered a cost, back to what Christian mentioned, that usually is something that weighs on your balance sheet, but you assign a positive value, like me investing in an upgrade of the plant that would not necessarily generate more revenue, but will cut my emissions by half. Assigning some kind of credit to that or additional number really would be able to unlock millions of investments from companies. That's a strong belief from our side. So, I mean, just to summarize this and leave a bit of space for other panelists to also comment here, is very clear that the crisis is not going to push this away. If anything, it's only going to energize the whole discussion. We see recent announcements in Canada where the government is actually making a very clear point that if companies get stimulus money or get recovery money, that needs to be tied somehow to a contribution that the companies will need to be reporting and also monitoring that they are contributing to climate change activities or supporting the fight to climate change. So we see that this level of integration is only going to increase. Yeah. So I would ask everybody to visit our webpage. There is a link there to Value Balancing Alliance. And we look forward to continuing the dialogue here in Canada and potentially coming up with these very important dialogues here locally as well. Yeah. So thanks again.
Thanks, Marcelo. We appreciate your leadership on this. We have questions rolling in. I'd like to remind everybody, feel free to enter your questions into the Q&A if you have any. We're going to address some questions after the next speaker. The next speaker is Usha Stankia. I've known Usha for a number of years. She's got a long time background in financial services and Big Four accounting firms and large financial institutions. And also in the publishing industry and research is a former CFO at Corporate Knights. So she has been doubly exposed to this stuff. She's with Deloitte now, which is a partner at the Value Balancing Alliance. And she's going to provide a bit of an overview perspective from somebody that's been looking really closely at this stuff for a couple of decades, although you would be able to tell it by her youthful visage.
Thanks, Toby. As Toby mentioned, I am an ex-Corporate Knights, or an ex-Knight, as Toby likes to call all of us. But I've also come back to Deloitte recently after having spent some time in industry. So just briefly, Deloitte is really obviously as a supporter of this initiative, and I've spoken with our German colleagues in the firm in preparation for this to find out what are some of the specific things that they're doing with the Alliance. And it is really interesting and heartening to see that there is so much of a coming together of organizations on things like this. I think for people who have been in the space a long time, we've seen so many versions and iterations of this, and everything has been either an organization trying to do it alone, as Christian was mentioning, or things like the Triple Bottom Line initiative that was met with great fanfare, but has all but disappeared in the context of being actually usable, comparable, and so on, of these same words that keep getting thrown around. I think things like VBA, along with what we saw in January coming out of the World Economic Forum, Bank of America, and the other big four, in a definition of ESG metrics and disclosure definitions, those things coming together along with the same sort of set of logos that you would have seen in Christian's presentation mean that we are taking concrete steps towards an actual usable set of standards that will eventually elevate the ESG metrics to the same level of what we see as traditional financial metrics. Currently, when organizations are disclosing their non-financial metrics, either through public pressure from investors or employees or other stakeholders, or through their own more purpose-driven approaches, they are disclosing them to some peril at their own extent. For example, if they are setting their own definitions of green revenue, or as Yulia talked about in what Manulife is doing, of being able, the need to set your own definitions is great from a disclosure perspective, but then goes basically puts you in your own category where you're asking the market and stakeholders to evaluate you in a separate sphere from your considered peer group. Things like Scope 3 emissions, you might have an interest in disclosing as an organization, but you are then reliant on the credibility of your supply chain to provide that information to you. So we're getting to see quite a bit of information, but you really need to use it at your own peril, essentially, from a user perspective and also at an issuer perspective. So then what you have is a lot of data, but not enough information to determine whether it's comparable across organizations. And to add another layer of complexity to that, you also have ESG raters and rankers like Corporate Knights and other investors who are taking this information and using it internally in a way that's not clear to the broader market, and making decisions on it sort of inside this black box. So the biggest challenge here is that we're asking companies to provide us with information that we want to use and elevate at the same level as financial measures, but there isn't the same level of rigor or consistency that you're getting from additional accounting standards. At the same time, you see things like TCFD disclosures. Marcelo mentions as well the link from the federal government to that. You're seeing regulatory pushes, and it's almost all these pressures coming in on this information that organizations feel compelled to disclose and want to disclose, but at the same time, there is a big disconnect between what the credibility of that information might be and how the market actually wants to use it. So things like the Value Balancing Alliance are extremely welcomed in this space to the extent that we can provide that consistency on how to measure and disclose the material issues and clearly connect those to long-term value. One of the things that we see is organizations who internally from a C-suite perspective want to use non-financial measures in their investment decisions, in their business decisions, but have difficulty feeling the same level of comfort with that information alongside a traditional return on investment metric, for example. And what they're missing, I think it's fair to say that for many of these organizations, there's a desire to use those metrics, but really the standards to enable the C-suite to feel comfortable in using those and presenting them to the board and presenting to their investment group and so on is really what's missing. So our hope is that the VBA and other similar organizations that are providing rigor and consistency can really help bring those ESG issues to a level where they're alongside the financial metrics in the corporate space or in the corporate boardrooms, and in a way that become usable for the market as a whole. I think we are talking many steps down the line, but this is a very important first step, particularly in the context of thinking about it from a management perspective, and then along the lines, down the line from a reporting perspective. When you put it in that continuum, it becomes relevant immediately to the corporations, and also the investment community, as Sara talked about, will then be able to see that the corporations are using that internally, and then they can evaluate on that. The reporting angle of it will come later, though that is many steps down the line and is equally important. But the key now is getting those issues being used appropriately, consistently, and continually within the organizations. So I think there are a lot of questions, so I'll stop there and hand it back to you, Toby. Thanks very much.
Thanks, Usha. We're proud to have you as an alumni night. We have a few questions coming in. There's one that Christian would like to take live. So I'm just going to dish this one over to Christian. The question is to do with how is the Value Balancing Alliance linked in, tied up with the Sustainable Development Goals and also with this SASB, the Sustainability Accounting Standards Board.
So we should wait for Mark to give his introduction, because he's one also of the key or heading one of the key organizations we are collaborating with. I think what is rather clear is that we have many initiatives working, let's say, in the direction of the same North Star, but we are all taking different approaches to get there. So talking about SASB in specific, the EU mandate we have received is including sector-specific guidelines, and this is the point where SASB will come in to provide in the end the first set of indicators when we are talking about sector-specific principles with regard to, let's call it, sustainability accounting. Frameworks such as the SDGs or science-based targets, yes, for sure, we are looking closely at them, but this will be implemented and included in our methodologies at a second step in time. For the time being now, we're really heading for a standardization of the measurement and valuation frameworks, and bringing in additional frameworks will be the next step in our methodology development.
Thanks, Christian. Next, we're going to go to Robin. Robin's got a beautiful backdrop there in the looks, I'm not sure, is it the Rocky Mountains? And she, again, you wouldn't know it by her youthful visage, but has a lot of experience in the Canadian efforts to date on the natural capital accounting file, including playing a role with the Natural Capital Labs that got a lot of buzz going several years ago. So I'll pass it to you, Robin. Thank you.
Thanks, Toby. So maybe I'll just pick up on that about the Natural Capital Lab, and just wanted to share a little bit about what that was about and what kind of came out of it. So it was an organized or a convening by the Natural Step Canada, as well as a number of partners, including the Chartered Professional Accountants of Canada, TD Bank, the Cooperators, Smart Prosperity, and Deloitte as well as a few others. But really what focus of the lab was to bring together a multidisciplinary group of innovators from the private and public sector to really address some of the challenges and develop pilot projects aimed to propel Canada into a position of global leadership in this space of natural capital management. So there were three kind of areas of action or work streams. There was one focused on corporate, a second on municipal, and then a third on federal and provincial initiatives. For the corporate initiative, we actually partnered with a financial institution to pilot the natural capital protocol, or a portion of it, just to really understand what are the pain points, what are the challenges, but also opportunities for the private sector to develop and actually conduct a natural capital assessment. For the municipal work stream, in partnership with an amazing organization called the Municipal Natural Asset Initiative, which is actually a great kind of prime example of how this work can actually be made tangible. So in partnership with them and in collaboration with existing efforts, they were able to revise the wording in the federal infrastructure funding requirements to allow for the consideration of natural capital in that. They also explored how municipalities are currently measuring and managing natural capital. In the third work stream, the federal and provincial work stream, with the support of the Ontario Trillium Foundation, the innovators drafted a natural capital accounts report for the province of Ontario, which included things like natural capital accounting as a framework for better informed decision making. So that's kind of a quick summary of the Natural Capital Lab. You can find more about who was involved in that, the innovators and practitioners across Canada that are working in this space online, as well as reports related to all three of those work streams. From a standards perspective, over the past number of years, I did want to mention, the Public Sector Accounting Board did put out for consultation their conceptual framework. And in that consultation, well, the current, I guess the old framework didn't allow for the recognition of natural assets. And so it was suggested to reallocate that prohibition into the standard section of the handbook, as it's more easily updated as a standard versus as part of the conceptual framework. So that was a step that was taken, which I think is a step in the right direction. But as many folks have mentioned already, we really need more concrete standards and guidance to help both the public and private sector value natural assets and then also account for them. I think in addition to that, we also need leadership from government to help support reporting requirements for both the public and private sector, as it really is, as we've kind of discussed, it's in the interest of the public's well-being. And Sarah mentioned this as well. For, I guess, the private sector, we need leadership from the private sector in this space for both investors as well as private sector players in ensuring that comprehensive value is being developed for the broader group of stakeholders, not only shareholders. And this can be done if we take on this capital's approach to value creation. Or, as the ambassador mentioned, we need to make collective public and planetary health a measure of wealth. So I'll leave it at that. Thanks, Toby.
Thanks, Robin. Next, we have with us Natalie Mudrak, who is one of the key people in Canada working on climate adaptation, and has done a lot of work on reporting metrics and risks and quantification evaluation. And so I'll pass the torch to you to provide us some light on adaptation and how that fits in with this.
Thank you, Toby, and to the panel for these insightful remarks. I think what I want to do is piggyback on some of the comments that Robin has just made and previous panelists, and specifically as it relates to the need to consider natural infrastructure assets for the significant economic value that they bring for climate resilience and disaster risk reduction, and also to underscore the need to account for this value by public sector entities as well. And in Canada, just as a reminder, the cost of extreme weather is on the rise. When we look at catastrophic insurable losses in our country for property and casualty insurance sector as a metaphor for the magnitude of the cost, we see that there has been a significant increase in the last decade. From 1983 to 2008, catastrophic insurable losses associated with extreme weather events in Canada used to average $500 million per year. But come 2009 onwards, every year $1 billion mark was exceeded. And we know that for every dollar of insured loss, there are $3 to $4 of uninsured losses that occur in our country associated with extreme weather events. And they are borne by individuals, government, businesses, and so on. And again, relative to climate change, flooding is by far the costliest and most pervasive natural disaster in our country. But when we look back at natural infrastructure, there is actually a really rich data bank right now that exists in Canada of case studies and assessments that points to the effectiveness of natural assets like wetlands, forests, riparian areas to function essentially as big sponges and reduce flood damages while providing other additional benefits to local communities. And just to give a few examples from M&AI work that Robin mentioned and some of the work we've done at the Intex Center, conserving wetlands upstream from City of Waterloo saves $50 million in property damages every time a 500-year storm occurs in this area. Conserving 7 kilometers of natural area along Oshawa Creek delivers approximately $19 million in stormwater management benefits for the city of Oshawa in Ontario. And similar assessments, they have been done all across Canada. And that's a good news. We have the methodologies and the skill sets to carry out these type of assessments for the value of nature, for climate resilience benefits that it offers. But unfortunately, as Robin mentioned, currently the Public Sector Accounting Board rules prohibit public sector entities in Canada to recognize the value of natural infrastructure assets on financial position statements. And this means that as Canadians, we may not have the full transparency over the loss and degradation of these assets over time. And in Canada, we are losing natural assets at an alarming rate. And with that, we are losing actually our natural capacity to deal with extreme weather events. So I would say that given climate reality, where we are seeing extreme weather events becoming more severe and more frequent as a function of time, we must begin to properly account for natural assets and to value them also from the standpoint of disaster risk reduction benefits that they offer. So that's something to add to that discussion. I think Public Sector Accounting Board can collaborate with entities represented on this panel to advance this file quite significantly forward. Thank you, Toby.
Thanks, Natalia. That is a really clear takeaway that I think we can work on to get done after this. So thanks for highlighting that. I'm going to turn it over next to Nick Zenos. Nick is sort of like the Chief Sustainability Officer for the Government of Canada. He's in charge of the Greening Government Initiative. He's with the Treasury Board. And he has been looking to implement the mandate that Cabinet has given around using the procurement levers to increase disclosure around some of these factors we're talking about. And that's a really powerful lever. And Nick has been doing some pretty important work there. So I will pass it to Nick to give us some background and share us some details on how this is shaping up and how we might assist. Nick?
Thanks, Toby. Thanks for the introduction. So yes, indeed, I'm the Executive Director of the Centre for Greening Government in the Government of Canada. We have something called the Greening Government Strategy, similar to a corporate sustainability. So we're looking at a type of plan. We're looking at greening the operations of the Government of Canada, greening our buildings, fleet, and our procurement. And we also have a policy on green procurement. And so the discussion today is really relevant because how do we, the procurement process, similar to investments, is pretty rigorous. You need to have comparability. You need to know what you're asking for in terms of when you want to buy greener goods and services. And so we're looking at various ways to do that. You can do it through a specific category by category objective in terms of, the Government of Canada is committed to buying zero carbon new buildings. We committed to buying 80% of our fleet to be electric by 2030 and buying 100% clean electricity, for example. Another way to look at it is looking at suppliers and their environmental record, if you will, and their disclosure. And so we have a commitment in the greening government strategy to work with our major suppliers to encourage the disclosure of their greenhouse gas emissions and environmental performance. So if we have good information on our suppliers, then we know we can look at and benchmark and see, you know, which suppliers rate better, et cetera. One of the things we've done concretely is in a recent large services contract, in the request for information, we asked for the supplier, if the supplier wants to provide us this large service contract, that they should disclose their carbon emissions and have a science-based target in line with the Paris Agreement. So then we don't necessarily need to ask for a carbon neutral service or good, but we know that the supplier is on the same track as we are to get to the Paris Agreement. So any information and data out there is very helpful. You know, if we're going to put mandatory requirements or points allotted in procurement, then that's significant. If you take the biggest procurers in the country and you bring them together and we start asking for these kinds of things, then that will help move the market as well. So I'll leave it there and happy to hear the rest of the discussion and questions. Thank you.
Thanks, Nick. That is really highly significant. I think what you just mentioned, and the context of what Marcelo mentioned too. It seems like the federal government is starting to indicate that they want to move faster rather than slower on improving disclosure around these factors, including tying disclosure on climate factors to bailout funds, and then what you're working on, looking at tying disclosure and alignment with the Paris Agreement to procurement. Because just for the listeners and the attendees and even fellow panelists, the people that supply the government of Canada, the sort of 200 largest suppliers, is basically a who's who of corporate Canada, and they're huge contracts, and none of those companies would want to miss out on any of those contracts. And so, if there is some clear ask on information, it's a really powerful lever. And as Nick said, if there's a more powerful group of procurers, especially if you look at the industry verticals, it could be some really powerful market making to happen there, and for the market to be a big driver with the federal government leading with its procurement muscle. So on that note, we have with us from Global Affairs, David Stuerman. And David has been working with Mark Gao at the Capitalist Coalition, which is aligned with Values Balancing Alliance, around kicking off a series of roundtables, which we love to do in Canada. And but this time the idea is to move with a sense of urgency and focus to get some results. So I'm going to pass it off to David.
Thank you. Thank you, Toby, and thank you very much. Good morning, everybody. I should just note, unlike Nick, I'm actually not going to be speaking on behalf of Global Affairs at this moment, although I do work for them. But I just want to sort of stress that, as we said, it's very important to ensure that we are working on this together, working on this in a way that is, the standards are universal to the degree we can, and that we're making sure that we're integrating the knowledge that the practitioners have amassed, that policymakers are putting forward, and also the companies are going to have to do. So the idea is to try to get a series of discussions going that include all three of these groups. We're looking right now at having roundtables in Ottawa and Toronto. Ottawa would primarily be involving government, but also other practitioners. Toronto would be more on the corporate financial side, but again, having practitioners, some representative government, just to see what's happening, what the needs are out there exactly, and how we can make sure that everything's aligned. This is very much building on the work that was done previously with Natural Capital Labs. As Robin said, this is building on the work that's being done by many other organizations. As was stated as well, this is being done very much in line with what the Capitalist Coalition is doing in other countries. We're trying to see if perhaps as a result of these discussions, a Canadian chapter of a coalition's Capitalist Coalition can be developed, such that a much greater sharing of information amongst various stakeholders can occur, and that we can make sure that Canadian expertise is fully represented in a lot of these international undertakings. I think I should also mention as well that one of the inspirations, and again, just to back up, part of the reason I was working with the Capitalist Coalition is I had worked at the Secretariat for the Convention on Biological Diversity as the business officer for quite a number of years. This is my connection to this group at the moment. But one of the things that had come up is a lot of the corporations, a lot of the companies we're talking about are larger companies, and it's extremely important to make sure they're on board. Sometimes what's missing in this is the smaller and medium-sized enterprises. A lot of these companies are going to be harder pressed to actually undertake no matter what kind of standards we come up with. Because if you think about it, the person who's looking at the carbon emissions, who's looking at the water standards, who's looking at how to look at social impacts, how to look at their human capital, is also possibly the same person who's cleaning the toilets and trying to balance the accounts. They simply don't have the capacity. We have to make sure that whatever we're developing for them is as consistent and as easy to digest for them as possible. So, and to try to give them some support. And again, I think these roundtables and then any subsequent developments could help in terms of moving this discussion forward and getting these smaller companies involved. And I think Canada is extremely well placed for this because of the nature of our economy. We are a G7 economy. We have some major international corporations, some major financial corporations, but we also have a lot of smaller companies, a lot of companies that are involved in the primary resource extraction or agriculture. So we're at several points in the supply chains. And again, if we can get this right in Canada, I think we can act as a model for many other parts of the world that have these various challenges. So again, we are putting together these roundtables. They're still in the planning phases. I would invite anyone, both on the panel and participants, who would be interested to please let us know, because from my view, the more the merrier on this. And I think the more participants we can get, the more information, the more sharing we can get amongst stakeholders, the more effective these discussions will be and the more effective our work will be in the future. I think I'll leave it there. Thanks, Toby.
Thanks, David. I'm going to turn it to Mark now. Mark heads up Capitals Coalition, which is doing some of the most fundamental work in this area. And Mark, if you could share with some of your thoughts, and also we're going to get the questions right after you speak. And it would be nice if you could reflect on some of the questions coming in are about a sense of urgency. And it sort of sounds like we might be rearranging the deck chairs on the Titanic. And you know, thinking about, we're at a bit of an Overton window right now in public policy, where what was possible 3 months ago, what seemed impossible 3 months ago, might be firmly on the table now. So thinking about, you know, how can we maybe do in 2 or 3 years, or 2 or 3 months, where we're planning to take 10 or 15 years, and if you could maybe inject a sense of urgency, I think that would be helpful. And if other panelists want to comment on that point after Mark shares his insights and comments there, that'd be welcome as well. Mark.
Thank you very much, Toby. And it's World Biodiversity Day as well today. So hence a good reason for us to be thinking about the urgency, particularly after the best report and various other things over the last few years. There is a definite sense of urgency. Just to be really clear, the Capitals Coalition is not an organization that is in any way competing with anyone. We were set up by many of you in this room and many of the organizations you work with to be a space that globally can harmonize and bring this work together. So the work that VBA is doing, that GRI is doing, that all of these others are doing, come together, and we don't look at ourselves as being an umbrella, we're more a bucket where all of that work comes into. And what we try and do is help to harmonize that and get those works, the things that are going on, to scale. And there is an awful lot of things going on. One of the biggest breakthroughs more recently is the work we're doing with Impact Management Project, which you may be familiar with. It came out of the G7 and was looking to bring together all of those disclosure activities. They've just recently changed their model to account for valuation to be at the core of what they're doing and not at the end. It's not benchmarking and rating. We can't disclose just a measurement. We have to disclose the context. If we disclose that context and value, then we have information that investors and various others can really find useful. So that is a significant step that's only just happened in the last couple of weeks. The work we're doing with Christian and the Value Balancing Alliance is going to be essential. Where we are at the moment, the last 5 years, several of you have mentioned the protocols, the Natural Capital Protocol, and more recently, we've joined up with the Social and Human Capital Coalition to create a Capitals Coalition. We can't just look at nature alone. everyone that started with us looking at nature very quickly realized that people, planet, prosperity are all very much linked. So the Capitals Coalition now looks across all of these. We connect the labor unions and everyone else through to the environmental ecologists in order to be able to do this. 370 organizations at the core, about 20,000 globally in 95% of the world's countries, and now using Capital's work. And we're the sort of central hub where that comes together. The work we're doing, Christian, is so important, this EGAP, the Transparent Project, because the last 5 years have been about we could do this. The protocol, as you've all pointed out, is rather broad. It was essential, though, to bring together those communities, start creating conversations, start to change the maths. All of that language is you could do this, you could do that. That's not enough. We're moving into a phase of we should do this, okay? And that's where the EGAP, that's where VBA, that's where all these other organizations are taking us next. It will define the boundaries of what we can and what we should do. We have to get to, we must do that. And we have to do that soon. If we're ever going to deliver the Sustainable Development Goals in this decade, we have to move to, we must do that. And that means all of us being consistent in the approach we take. Our communities across government, we run a government dialogue with over 100 governments now, the business community, the finance community, the NGOs, the academia. We've got 58 universities and colleges now around the world that are developing programs of work to really upskill the people that we need to do this. All of those different communities are very aware of the urgency with this. We have got to change the mainstream though, and there's a great opportunity now, building back better, the recovery after COVID. We've all seen what it's like to live in a world where we're not flying all the time, where there is a chance to see the seasons, to feel nature again. We've got to capitalize on this now. We've got to start acting now. And we have to have every decision to include nature and people in what we're doing. It's no good anymore just to look at shareholder value. It's got to be the value for everyone.
Thank you, Mark.
Was that urgency enough?
Yeah, those are inspiring. And actually,
good.
Talking about shareholders, there's a good question here. I'd like to pass it to Christian and then Sara with your investment hat. So the question here is: shareholders provide the capital to start and operate a business. They take the risk that the business will fail and they will lose their investment if it fails. They also get a return if the business provides benefits. Your method, and you can qualify, Christian, if this is a proper interpretation, your method of measuring benefits includes benefits for stakeholders that have not provided capital and therefore do not have the risk of loss, yet they receive benefits as you measure them. How do you justify this asymmetry of risk and return? So over to you, Christian, first, and then Sara.
So first of all, within the VBA, we are fully convinced that dividends and share prices of companies are currently fully impacted already by natural, social, and human capital. What we are heading for is providing a standardized measurement and valuation framework to provide much more information, also for investors, but also for the broader society, to assess in the end the performance of companies in a much broader way. So we think that if companies take this serious, and if companies are performing along multi-capitals, yes, we will provide much better long-term value, and yes, dividends and share prices will increase over time. Secondly, yes, corporates need to think about their role in society. So yes, we are reliable towards our shareholders, but we also need to take our stakeholder perception into account. Otherwise, also in the long run, we will fail to do business because we are losing our license to operate. Just one word with regard to the need for urgency. I have a small story to share. It takes me 1 minute. Please give me this time. I was just a few months ago entering a discussion at a high school in Germany, which was hosted by the Fridays for Future. And one small boy, he was 13 or 14, was standing up and said, "It's the first time listening to corporates who are providing solutions. When I'm listening to the media currently, I see climate change all around. I see that jobs are changing over the time and my current education will not make me fit for the next 5 to 10 years. So where is hope in my life?" And I think we as business and all business players, the real economy as well as the financial markets, we have really the responsibilities now to provide solutions and to demonstrate ways how we can move forward, taking into account challenges like biodiversity loss, challenges like climate change, but also health impacts based on COVID-19.
Thank you, Christian. Sara?
Sure. Yes. A good question, and I think that for this topic, it can be useful to take a cue from comedy improv, which might not be the first source you think of, but this idea of really trying to and situations, and with that, thinking about, like I mentioned before, I think we're increasingly appreciating and understanding the interconnectedness of various stakeholder groups of the natural environment and capital markets and the economy more broadly. And so when you think of it, the situation we are currently facing, and if employees don't feel safe coming to work, that impacts the company. If you have a development project in a community, and the community hasn't been consulted in a way that they feel their input has been accounted for and taken seriously, you're going to get pushback. So I think at times it potentially seems like these stakeholder groups aren't kind of tied to the investment return that investors are seeking for the risk that they are taking by making that investment. But I think if you step back, you can see those ties and the importance of understanding what impacts an investment, and it can be things that are kind of outside of the shareholder world and draw on what the community cares about, what is impacting society, and issues that relate to the environment.
Thanks, Sara. We've had a lot of questions come in, and we've been answering them live in written form as well. And we'll be posting all of this online at Corporate Nights and sending a link to everybody along with the video later today. So, and I believe we'll be able to share, with Christian's permission, the presentation as well. But before we close, just being respectful of time, I'd like to do a poll. So I'm going to launch the poll now. It is Canadian companies should play a more involved role in keeping up with and shaping evolving global measurement and evaluation frameworks. And so vote away and see where we land. So it looks like the votes are kind of rolling in. It looks like we're close to, over 3/4 of the people agree or strongly agree. So if you're one of those people who said you agree or strongly agree, we're going to consider you allies as we move forward, and we'll be reaching out with other opportunities to follow up some of this talk with WALK. And in closing, just to be respectful of the time, I want to thank all of our panelists. I want to thank the incredible work and the foundations that have been laid by all the pioneers that are here. The really focused work that's happening by Mark and Christian with the Capitalist Coalition and the Values Balancing Alliance. The great leadership we have in our federal government with Nick Xenos implementing and making happen some of the aspirations from the platform of the current government, and everybody else here. So really want to thank you for putting the time in, and let's go make something happen with a sense of urgency in these coming months when this window is open. So with that, happy World Biodiversity Day, and have a wonderful weekend. Thank you.